Hi, this is Dave Ford, President and Founder of the Atlantic Gold and Silver Center. Today is Wednesday the 2nd of August 2017 and today we're going to look at Whack-A-Mole, the Precious Metals Edition. How many of you remember the fairground game of Whack-A-Mole? You get a great big mallet and you have to hit the moles on the head when they pop up out of the ground. It's fairly simplistic, doesn't require great skill, just fast reactions and good timing. Now it's great fun while you're young kids, but kind of boring after a while. But some grown-ups still play this game and they play it in a slightly more sophisticated way. They play the precious metals version of Whack-A-Mole and it makes them rich. Now I've been following the price of gold since I started investing in 2000 when the price was around about $300 an ounce, so that's just over 17 years. So let's have a look at the really long-term trend of gold going back all that way and see where and why people have been playing Whack-A-Mole. Okay, here's a chart back to 2000, just before the start of the last bull market. Now I've drawn two studies on here. One is the 200-day moving average, which is in orange, and the other is the 200-week moving average, which is in blue. Each of these little candle bars is actually 1 week, not 1 day, because we're on such a long time frame. Now most individuals will use the 200-day moving average to decide whether a market's in a bull market or a bear market. Price above means it's a bull market, price below it's a bear market. But most larger investors and institutions will actually use the 200-week moving average as a much longer term and smooth version of whether something's in a bull or a bear market. Now if you look, starting back in 2000, we saw the price for the first time in quite a while start to poke its head through the 200-week moving average, and shortly thereafter it went through decisively and never came back, and it stayed above even the 200-day moving average for most of this bull run. Now the only time the price came back down was when the price got to $1,000, which was a very key psychological level, and it did force the price back down. A lot of people sold off and it went back through the 200-day moving average. But look, once it got to the 200-week moving average, that's when institutions and other sort of bigger investors would step in and buy it because they knew the uptrend was still intact, and that kept it going back up above its 200-day moving average all the way back to just shy of $2,000 at the top here. Now nothing goes up forever, once the price had come back below the 200-week moving average back down here, that was confirmation that the uptrend really was over, and that's when Whack-A-Mole was on for sure. Okay, so if we have a look, we see every time once we've come through here decisively, we see every time the price hits the moving average, it gets hit very, very hard, and there's a massive sell-off here. Managed to make it through the 200-day moving average there, but then a massive smackdown again. Pops its head above the average, back down, pops its head above, smack back down, pops its head above, smack back down, and down again. So each time the price rises above one of the key moving averages, that's when they start to whack the mole back down again. Now, once the price got below 1100 here, things really turned around. This is the end of 2015, the start of 2016, and the price really did turn decisively through the 200-day moving average. Whack-A-Mole happened again here at the 200-week moving average, but it wasn't very successful. Just brought it down a little bit, and the price actually rallied right through here and actually held above the 200-week moving average for some time before finally coming back down. There was a bit of a powerful sell-off here late in 2016, but again the price rallied, and now we're at a moment of indecision, as we call it, as the price fluctuates between and around these two long-term moving averages. What's happening here is the downward manipulation is starting to end. Now there is less reward for people to short the market when they know it's not going to move very far. The signals are less clear because each time it goes through the moving average it doesn't immediately come back, and so for people who are whacking the mole down again there is more risk, and it's not so much fun to play Whack-A-Mole when you might actually lose. Let's switch over to silver because I know some people want to look at silver too. Okay, same chart, gone back to 2000 here. And the reason I started with gold is that silver follows the same patterns, but sometimes the signals are less clear because silver is so volatile and can move up and down so fast that sometimes you can't see quite so clearly what's going on. For example, when gold sold off and stopped at the 200-week moving average, silver actually went through it for a few weeks there before recovering and coming back up. And you could argue that the bull market in silver didn't really take off again until later in that year, whereas gold was still intact. So that's a slight difference just due to the volatility. Now, when silver came down, it did go decisively through its 200-week moving average again. Again, we see the whack-a-mole happen every time it hits an average. And this time, it did come back through its 200-week moving average, but unlike gold, which has stayed on or around or above it, silver is still slightly below. Now, the key level for gold was around about 1200. The key level for silver, which it seems to have recovered from and touched off here, is around about the $15 mark. If we just switch back to the gold one, we see here 1200 was a very key level for gold. When it broke through, it didn't stay down below, and then it came back up, and it's been staying mostly above that apart from a little dip at the end of the year just there. In conclusion, the bear market in precious metals finished at the end of 2015. Since 2016, the price has recovered, although it's been mostly sideways with a few ups and downs since then. Now, don't expect it to suddenly take off and go up very fast, because new trends do take a while to establish themselves. However, if you're just buying and storing precious metals and putting it away for the long term for wealth preservation, then this summer is a great point to be investing. Thanks for watching, and we'll see you all again in a couple of weeks.